everyone, and welcome back to another show. My name is Tyler, and I'm with Matt, the founder of ORATS, an options analytics platform built on top of over 15 years of historical options data. Our dashboard is integrated with Tradier, meaning you can research and discover trades on our platform and then seamlessly send them through to your Tradier brokerage account. Today on the show, we're going to talk about how to analyze options information on your stocks. Matt, do you want to share your screen and get us started by going over our current positions?
Absolutely. Okay, so we had a SPX short call butterfly. We were hoping to see slope come down. And so by selling this call, it had a bit of slope versus the put, and then buying one out of the money, which didn't help our slope isolation of alpha. We're wanting to profit from that slope coming down. So if we look at it, it was doing all right. Now it's going against us a little bit. This is the trade history tab. So it's really cool to look at. In the trade builder, you could see it also where it is, where the strikes line up. And then you could also see that slope is coming down, but not enough. So we're down a little bit in this, but it's a longer term trade. So we're sticking with it, Tyler.
Sounds good. All right. So this week, Matt, we're going to talk about analyzing options information on your stocks. Well, what does that mean? It means we're going to use the stock scanner a lot and the trade builder a lot to look at the different options information that is impacting your portfolio.
Yeah, so it's nice. We have a nice community, and so one of the bits of feedback that we got was someone was enjoying using the stock scanner as a way to look at data on their particular holdings. So, for example, you could paste in a list or a symbol here of your holdings, and then go get a lot of different data points, including many ones that don't appear in the drop downs, but that appear in our list. And you could also do ratios. So there's a ton of things here. So I just wanted to point that out real quickly. So let's just say Nvidia is one of our stocks. We want to see things like, implied volatility of the 10-day. So you would say display, and there's the 10-day volatility. If you wanted to see skew, you could see the slope and display that. If you wanted to see, forecast of volatility, dividends, earnings, various ratios, historical volatility, let's do a 20-day intraday implied, so we could look at that. So you could see how this works. And then when you find something, you could say save to my scans, and you could say, information, you could say option information on my stocks, and then come back to that anytime. And again, like I said, you could paste a list in or go look at certain things. So that's one way to do it. Of course, if you type in Nvidia and click on it, it's going to go to the Outlook page. The Outlook page is what we think when we bring in and think about a stock, some of the most important data sets that ORATS has, including this initial one, which is a graph of implied volatility. You can see that the implied volatility is generally inversely correlated to the stock price. So like as vol started going up, Nvidia started coming down, and then as it started coming down, it's been rallying, and you can see that kind of here. So you'd be watching for this implied volatility, which is kind of at the low end. If it keeps going down, that's good that's bullish, let's say. And then, so that's what you'd look at in this first kind of stock price and implied volatility. Secondly, what you do, and I'll turn on my screen writer, you would look at Nvidia versus similar stocks in the XLK _C. Of course, that means that the component weighted average for the most directly similar ETF and then we do the relationship. So right now what we're seeing is Nvidia divided by that is low. So Nvidia vol is low, and we've seen this vol come down. And again, this is inversely correlated most of the time as well. This is a little bit more subtle, but basically what we're seeing is Nvidia. If you're talking about implied volatility, it seems fairly low in Nvidia. Also, while we're at it, let's look at Contango. Contango is when a stock's in Contango, it's got the front months lower than the back months. Now we have November pretty high there. So we also look at Contango on an overlay. And again, Nvidia is a little different than most. Like for Contango over the ETFs and market-wide indexes, I would say that when you have high Contango, that's usually good, and low Contango, when it goes negative into backwardation, that's bad. And you're kind of seeing this a little bit in Nvidia. Interesting, that's kind of given up a bit. So that might be, we say neutral on stock price, but that might start to be a little bit interesting that Nvidia's Contango is going down, which is not usually good for prices. Slope, we don't usually see a strong correlation. It's just basically how much the puts are than the calls, and then we do that in comparison again to the best ETF. So Nvidia is fairly high versus its historical average. Anything else on the outlook before we switch to some other things, Tyler?
Yeah, let's keep going. That was a good. I mean, those are our most commonly used indicators. The slope, the Contango, and the IV. There are also some others, maybe not worth touching on today, but flat forward versus forward implied volatility. That's another ORATS indicator. You can learn more about that on the university and in our indicator definitions. But there's a few other ones that aren't in the outlook, but are worth exploring if you really want to dive in.
Yeah, the flat forward is one of my favorite, but it's a little bit hard to explain. I should also mention while we're here that the next earnings in Nvidia is November 20th. And so that's why you're seeing the spike. When we look at Contango, we look at X earnings. So we take out that spike. So that's why Nvidia is looking a little bit weird right there in the.
You can actually toggle that on the top right of the graph, Matt.
Okay. You got that?
Yeah, there you go.
So that's really cool. I forgot about that. There's a lot of things in here, but anyway, this is really interesting to look at, because look at how ugly this one looks. And when I say ugly, kind of a little bit up and down, choppy. Yeah, thank you. This one is fairly smooth, and what we try to do when we calculate an X earnings volatility is we try to find the implied earnings effect that lines this up the best, that makes the most rational term structure. And so I think we've done a pretty good job there. The implied earnings effect is 300% here. And we could also actually go back to the stock scanner and see what the implied earnings move for Nvidia is.
I think you got to display. Yeah, show it on there.
So display is nearly 9%. So now let's go look at earnings now. So Nvidia's earnings, like I said, nearly 9%, 8% the last time this reading was made, 8.8, versus its historical average over the last 12 quarters of 8, and the actual moves is 8.3. This is actually pretty high. I was on a webinar earlier today, and one of the calculations I did was the average, the component average of the NDX versus some other ones, and and it was much higher. So let me say that again. So in the market currently, the implieds are much lower than the average actuals. So implied in the market lower. This is kind of bucking the trend in the sense that this is generally higher than it's been and higher than the actual move. So that's interesting to look at. And then, you know, a lot of people like this graph because you could see that whenever something is outside this implied range, so this is the implied range. So this goes over, it's about 9% either way, up or down is what we're showing here. And we're showing this how it ended up. So this ended up within the range. So if you own the straddle, you probably lose money. If you own the straddle where it goes outside, you probably make money. So that's the gist of this informational tool that we have on earnings that a lot of people like to use. Anything else on earnings, Tyler?
No, it's a really great tool, and that implied move graph is it reveals a lot about the stock.
Yeah, definitely. So what we could look at now is I like to take a look at the time to sales. What is going on out there in the market? So basically, we look at all these trades, and like for example, this is a big call spread. So that it was long delta. So dollar delta just means that it's the delta of the trade times the stock price. And so this is a long, way out of the money call spread that went up 10,000 times in December. So that's very, very bullish trade here, and you can see it on the graph. The big green correlates to the big green in the dollar delta. There's another one probably here. So traders are long delta. They're neutral options premium, so they're not buying a lot or selling a lot, but they've been profitable today. So we test the profit as well. So I think that's a real neat thing to look at. And you could download this and you could go check out prior days and see how Nvidia was going. Their long deltas there on the 18th. On the 17th,
that summary looks at all those traits and
right.
combines them into a very easy to understand thing.
Right. And so, again, I think that's, extremely interesting to look at. Again, back to today, long call spread, out of the money call spread. They're trading. This is all interesting information to look at. We actually put our edge up there and what the current price of that and the profitability is. So good information, need to look at. All right, so moving on from there, the time and sales, Tyler, you could also go in and once you've formulated whatever your strategy is, you can, I'll clear all the settings here and just put Nvidia. And you could look at your strategy. So, in my case, I think that the earnings is a little bit overvalued. And so, I would do something like, wonder if what are better, the call calendars or the put calendars? So we could look these up. When I say better, from a theoretical standpoint, maybe we'll go a little bit shorter term, maybe even 1 week, and do this a little bit farther out. And let's go out of the money. Let's go down quite a bit. Make these less expensive. And all right, so that should give us, well, there's only one that matches that. So maybe, I wonder if we should go up a little bit. Let's go to 30. All right, so we have a call calendar and a put calendar. Neither of them is really great from a forecast standpoint. Let's look at another thing. Let's look at an iron condor. And let's do that again. Let's look at a week. All right, so these are looking a little bit better. I'm sorry. The reason these don't look that great, Tyler, is I forgot that earnings was that far out. So earnings is the 20th, so a month out. So we got to go out farther. So
right, this is an
my
earnings.
confusion.
I should have stopped you. I was trying to remember when earnings was on it.
Yeah. So and we say when it is here too. So that's good.
Yeah.
So we often will do trades that incorporate or include earnings. So it looks like the put calendars are looking pretty good here with a really good forecast. So this will be something that I would think about doing here. So let's take a little bit more of a look at it, Tyler. So again, the neat thing to do is be able to see it in the payoff graph. Clearly vol will come out as you could go out. You can adjust the DTE. It'll show you where you made your money. You could adjust the vol, which will probably be coming down. So that'll be losing money here. And then at expiration, it's there. So we're going to be pretty close to this expiration there. So it should be not too bad. So this doesn't look horrible to me. So let me see. What else do we have? What else do we have to look at? I think it's interesting to look at in the trade builder sometimes.
Yeah, Trade builder is a great way to visualize the break evens, along with it, just sort of like a time horizon, right? Like it's because we overlay the options chain onto that 2D graph, you can see relative to the historical movement where your break even points are at, where your max gain and max loss are at. And
yeah, I mean, so if you look at break evens, so we draw them in here 119, so basically 120 to 155, and we draw them in here. So does that look good on it? Kind of looks good to me. So that's a pretty good range. I mean, obviously Nvidia has been moving around, and so 3% today, but it's pretty high implied volatility. So we're we're selling a 61 and buying a 52. So I kind of like this one, Tyler.
Yeah, I think it's smart. And then the plan is to leave it to expiration, or what's the plan for
expiration of the front one? Yeah,
expiration of the front one.
I shouldn't even say that. I should say, so we'll add an alert to give us an event alert, one day after earnings.
That's smart.
Yeah, T-Hub. And I like to tell myself, what type of an alert this is. I should also say that there's, let me get this order sent. So let's do a force, and we'll force it at 363 is the value. We'll give the market makers a few cents. So I'll give them like 3 cents, and that will usually fill.
Nice.
All right, so that filled, and what I'd like to do now is, we still had that risk reversal on an Nvidia that that's doing all right, up $2,000. So that's a pretty good trade that we've had on. But let's look at this put calendar. Let's put on the alert. I didn't press send on the alert, so this is it. So yeah, so we should be notified the next time that happens. All right. All right, Tyler, anything else that we want to talk about?
I mean, we looked at the trade builder, we looked at the earnings tab. We could backtest the long put calendar on Nvidia with earnings,
right.
And the legacy. You could also, I mean, it's also in the Finder. If you wanted more like earnings specific backtest, then you could probably go with the legacy. But just to see like in general how it does.
Yeah, in general, these are longer term. So we want to do something that's over 10 days, but less than 111 days. And it has to go look through 181 million, so it does take a while. Tyler's talking about the legacy backtester. I think we don't quite have enough time to get into all of that detail. This is showing that generally the put calendars don't do that well in Nvidia, and potentially the reason is it's just gone straight up. So typically put calendars won't do that well when you have a stock that's just going straight up. But hopefully, in this case, we have earnings, and if we get some type of a pullback or something similar, this will do fine.
It also doesn't take into account buying that other one back, the longer leg, because this exits at expiration, and so it's a little bit different than the trade we're planning on doing.
Yeah, well, this exits at expiration of the front one, so we could do that.
Oh, it does. Okay.
Yeah, it doesn't hold, so it's just it exits when that one exits. So if you look at the trade log, so this is on January 3rd, 2024, with the stock at 475. You got into the 375, 385. This is actually you get a larger strike with. We didn't open that up, but so at expiration, that was worthless, but because the stock went from 475 to 721. So again, huge rally there. So that was during the time. Anyway, so put spreads put calendars aren't going to do too well with the stock rallying this hard. So clearly on earnings, we're looking for, and it's valued such. That's why it came up as well valued, is because people are still valuing those put calendars with the expectation of a bullish move.
Gotcha. That makes sense. Well, unless you have anything else, Matt, I think that was a good show for today. We can check out the options chain on Nvidia, but and the visualizer.
Sure. So yeah, the options chain, like, again, this is really cool. You could show where you're selling and where you're buying. So we have that kind of 60%, 61, I guess it was, and then you're buying the 51. So that looks pretty good. And then it shows you, the theoretical values, your forecast fall, and what you're selling. So that's, that's a good thing to look at in the option chain, as well as just the ability to visualize the entire skews. This is, a lot of work to put together this visual with summarizing the implied volatility skew, and coming up with theoretical values, and then coming up with our forecast. So I think this gives you a good visual of the trade, Tyler.
Great. Thanks, Matt. All right. Well, thanks again, Trader, for hosting. It's the ORATS dashboard now with live data. The potential that you guys have as traders, in what the tools are. ORATS offers so many, like, option scanners and back testers, stock scanners, earnings graphs, and options chain visualizers, everything at your fingertips. And now with live data, you can connect to your brokerage and send everything through in live real time. So it makes it super easy to trade if you have whatever broker you're using. So that's offered on our website and our documentation. If you guys have any questions, there's a community tab in the ORATS dashboard, but you can also leave a comment on this video or email us at support@orats.com. Thank you, Matt, and thank you, Trader, and we'll see you guys again next week.
Thanks, Tyler.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.